Hello, welcome to Cherry Bekaert's GovCon podcast, where we discuss current government contracting trends, compliance matters, and best practices to guide federal contractors forward. My name is Eric Poppe. I'm a managing director in our government contract services group, and with me today is Todd Angioli. And today we are talking about operational effectiveness and mid-year budget and forecast considerations. Todd, first, thank you for joining me on the podcast today.
Yep, glad to be here, Eric. Thanks.
So at the end of last year in Q4, you and I sat down and did the first podcast in this series where we're really talking about Q4 considerations as you're moving into the new year and having just kind of an annual operating budget discussion. I know this is the second podcast in this series, really focusing on budget considerations, and we'll do another one in August too. But just to kind of, as contractors we're halfway through the year practically now, what are some of those mid-year considerations that companies should start thinking about as they're forecasting the rest of the year and looking what happened in the past?
Yeah, I mean, I think at this point, and all of these things that we're going to talk about are things you should be thinking about all throughout the year, at a minimum. But this is the point where instilling realism and making some hard decisions and making some real significant course corrections if necessary. This is when you have to do things. There's not a lot of time left in the year, and instilling realism is really important at this point from all the way through, from a top line through to the bottom line projections.
It's that. So I always feel like at the very beginning of the year, everyone's very go-getter, trying to get new projects off and running, trying to hit those early forecast projections from a revenue standpoint. And then for the finance and accounting teams, they kind of get into, the dog days of late winter and March and spring of tax season, audit season, just getting through that, dealing with bank covenants if you have to deal with that, getting lines renewed, working with the auditors. But then come April and May, the fog starts to clear, and there's always kind of a readjustment period of like, all right, well, how are we doing back to actuals, and what did we originally forecast, and look at those budget projections. And I feel like a lot of it coincides with if for contractors, if you do especially cost plus work, looking at indirect rates. From your standpoint, are there any certain items that companies should kick the tires on when it comes to expectations on what they originally forecasted?
There's a lot of things going on. Yeah, so I appreciate that. All of that's spot on. I was thinking while you were talking, like, there's a certain level of attachment to your revenue forecast. You want to, you projected something, you want to hit your numbers, and you're attached to it. And for the first, 3 months, 5 months, whatever it is, even though things are shifting to the right, things get canceled, you're still trying to hit your number. You start to move things into kind of like a go-get or a wedge or, whatever it is, unidentified new business. But at this point in time, if things haven't happened, they're not going to happen in a timely enough fashion to hit your numbers at year end. So now is the time to start coming off of those revenue projections if you need to. Hopefully you don't, but if you need to, now's the time to start doing that.
Well, and that's a good point, because you probably back in Q3, Q4 of last year, you went through, all right, what are the new opportunities that we're trying to go after? What are my recompetes? What are my options that are probably going to get extended? You've gone through P-wins and done all that, and you're forecasting. Well, then, things happen. You might have lost a few of those recompetes that you thought were going to happen. You might have won a few unexpected projects that are now in there. And if you are trying to make up any revenue gap, you're probably looking at short-term solutions where you can get into a teaming arrangement or subcontracting arrangement quickly, because it's just the sales cycle for some of this work is years.
Mm-hmm. Yep. I mean, I was talking about the new business stuff, the recompete stuff that you mentioned. It's really important, and current execution is what you're talking about now, right? So current execution is, let's talk about T&M contracts. Is it lost revenue at this point, or can you recover some of it still? I mean, you got to look at all of your revenue projections, not just the new business stuff, not just the recompete stuff, but the current execution stuff as well, and seeing if there's room to make stuff up. And like you said, is there other, if there's ceiling available and meaningful work left in scope and statement of work, how much of that can I do? And can I pull in, like to your point, can I pull in some subs to help with that work to get some things done here before the end of the POP or even before the end of the calendar year? So, and all that flows through, Eric, when you talk about, we're just talking top line at the moment, but what's the direct labor impact of some of these things that we're talking about? And what are these impacts on my indirect rate structures, right? If I'm going to lose base as a result of some of this, or if I'm not delivering the base that I said in current execution or what I had projected, when do I start coming off of my spend, and how do I optimize my costs at this point in the year?
Yeah, that's in, and yeah, it all trickles down. Starts with the top line. Everything is based off of that, from a direct labor, direct labor, materials, everything is built off of that practically. And how that feeds into your rates, because from a rate standpoint, if your labor is a lot less, and of course your pool and your benefits and indirects are all still the same, your rate's gonna go up. So then you're wondering, all right, well, what was my provisional billing rate? And then how am I billing that? And worrying about, are we really overrunning? So like best practices that we always tell clients, that you should be monitoring your indirect rates on a monthly basis. And if there is a material change, and there is some gray area, there is a lot of it depends on doing this, but if there is a material change in your rates, you should potentially reconsider submitting new provisional billing rates and getting that in.
Yep.
Just so you don't have a big, issue from a financial reporting perspective on the back end, and also surprises. Because like I would think, adjust it now, so then you can readjust and plan. It's not going to be a surprise come November, December, January next year.
Yeah, I agree 100%. I've seen many mid-year burden recalc type activities at the firms I've been with in the industry. So while you were sharing, Eric, I was thinking about how have the needs of the company changed in the past 6 or 8 months, right? Well, we may have been investing early in the year in business development and B&P effort. At this point in the year, how do you shift, appropriately the investments that will have the biggest impact on your company between now and year end? If you've got gaps on your contracts and you're having trouble staffing, right, you want to invest money in recruiting. If your IT backbone is not supporting the organizational structure and the growth that you're projecting, how do you reinforce that? So now you move your investments around based on need. And then I would say the next layer would be, okay, now that I have my investments where I really need them to maintain and or move the ball forward, now I can look at what's left in terms of cost optimization. If I don't need to invest so much in B&P now, or BD now, or HR now, I can move my funds around. Then I can evaluate my burden recalc.
Well, and yeah, very, very true. Agree with 100%. All those points. The other thing that popped in my head there is, the reevaluation of costs and people for a lot of our professional services companies, if they're on contracts, depending on what that labor category is and the requirement. Of course, now you're dealing with customers and making sure they're okay with everything. But is there any way you have top line? Yes, one thing, but then what's also that margin? And is there ability to get new people in there? Like, what are those other levers of, if it's greening staff? Is it, getting in other folks in there that can meet that qualification that could actually, every dollar kind of matters. Yep. So, but yeah, optimizing really that, whatever you can and readjusting mid-year so there's not the surprises at the end of the year. Now, I guess one question for you is, are there any other forecasting or planning areas that companies should consider as they move into, we get out of June and July and we get into kind of the end of the new government fiscal year coming up?
Yeah, I mean, getting this forecast right at this point in the year really gives you the launching point for your annual operating plan planning process that usually occurs, August, September timeframe. So this is positioning yourself for that. If I back up a little bit, Eric, one of the things you mentioned was, these essentially improvement initiatives, which really should be going on all year long. But at this point in time, when you're trying to instill realism and you're taking a good look at execution, this is when you start to really implement profit improvement initiatives. If profit's an issue, this is where you implement the profit improvement initiatives. And you were starting to talk about staffing, which you should always be thinking about as well.
Yeah.
But when you're thinking about profitability initiatives, you're looking at what's my current staffing mix and looking at, have I leveraged my mentoring and coaching approach in bringing up my junior staff? Have I been effective in that? Do I need to push that a little bit harder? Right? How about my fixed price contracts, my T&M contracts? All of those things, all of those types of initiatives around profitability exist, staffing, and I would say, cash flow and day sales outstanding, right? If you want to look at your DSO at this point in the year too, well, how can I improve? What am I doing well? What am I not doing well? All of those things come into play all throughout the year, but now especially to push to the end and to establish having good trends to plan from come August, September.
Well, and that's a good segue because we were actually up on time for this podcast. And, so for all of our listeners, please make sure to tune in to the previous podcast, if you haven't heard it yet, that Todd and I put on for Q4. But we will be putting on another podcast in this series at the end of the summer to help kick off that annual operating budget season and considerations as you go through that. So perfect segue, my friend, and I appreciate you joining on this episode of Cherry Bekaert's GovCon podcast.
Excellent. Thank you, Eric.